Economic indicators for trading and making money. Economic indicators are indicators that we can use to assess or determine the direction of the economy. These indicators are data about various things. Several institutions or agencies are responsible for calculating and routinely publishing this data. Some of these institutions, for example, are the Central Bank, the Bureau of Statistics, the Ministry of Manpower, and other public agencies. Some examples of economic indicators that we often encounter include Consumer Price Index (CPI), central bank interest rates, vehicle sales data, unemployment data, retail sales data, gross domestic product or GDP, and so on. Generally, countries worldwide use GDP-based economic growth indicators. GDP data shows the size of a country's economy based on its production output. By using this data, we can compare the economic size of one country with another. Based on GDP data, we can see how the Chinese economy grew in just a few years to be able to overtake the United States. The concept of purchasing power parity (PPP) is often used to compare economies between countries. Usually, analysts use the US dollar as the value basis when calculating this comparative value. On the other hand, the economic development of a country over time is shown by GDP growth. The percentage value of the GDP increase indicates how fast a country is experiencing economic improvement. If the growth shows a negative number, it can be said that the country is experiencing a recession or an economic decline. By understanding the behavior of these economic indicators, we can predict market movements, whether in a positive or negative direction. Changes in economic indicators will impact financial markets, such as the prices of stocks, bonds, foreign currency, and other securities. If we know in advance which way the market will move, we can certainly take a profitable position according to the situation at that time. Both directions of market movement can generate money if we take the right position. Some people call this condition luck. However, for those who understand, luck always comes to those who prepare themselves. This is where the importance of understanding economic indicators before trading lies. Good luck, and if you feel lucky after watching this video, don't forget to subscribe, like, and comment to support this channel.